Yo, what's good, guys? It's been a while, guys. Welcome back to the channel. It's Charles again. Welcome back to Charles the Trader. Charles the Trader. We're back again. Okay. Initially, I made a video on btmm. Okay, I'm a btmm trader, and I also combine a little bit of ICT and smart money concept. Okay, but for now I'm dwelling on just btmm trading. Okay, maybe so today we're going to be looking at the TDI, the Traders Dynamic Index, and I believe it's no longer common. So this is my chart. Don't mind how rough it is, and don't bother ask me about all this stuff here. Okay, but these are like more of all these lines here. You could see I have more of like a buy zone and a sell zone. These are TMA lines. I think triangular moving average. Okay, but today's video we're going to be dwelling on the TDI. Okay, like I said, the Traders Dynamic Index, and the Traders Dynamic Index is an hybrid indicator. Okay, we normally use it. We use it a lot with price as btmm trader. Okay, where I think the TDI comprise of it's an hybrid indicator which comprise of the volatility band, more of like your Bollinger Band. Okay, similar principle. We have the RSI, and we have moving average. Okay, like this middle line here, it's the market baseline. We also have the signal line, which is this red line here. I think the red line, there's a moving average 7 also, and we also have our RSI line, okay, which is your normal RSI, and we have the band. Okay, so we have so many ways we use the TDI, but the most particular one we use is we normally want to see price shoot outside the Bollinger Band or close to the edge of the the band, the volatility band. Sorry. That's how we normally use it. Okay, take note, the TDI is not a signal. Okay, it's not a signal. We only use it to confirm. Okay, we use it to confirm price action. Okay, we use it to confirm price action. So what we normally look at in the TDI is more of like when price shoot outside the volatility band, and we also use divergence. Okay, divergence, you know what divergence is. Okay, divergence between price and indicator. Okay, so we also make use of divergence a lot with the TDI. Okay, so normally this video is for the TDI, like I said earlier. Okay, so what we normally do is we coupling with how we trade the btmm. You could see on price here, this is my chart. Okay, this is MT4 chart. This MT4 chart, and if I was to come here, this is for trading view. Okay, this is for trading view. Sorry, I just migrated, and you could see my TDI here also. So for those who use TDI, for those who use trading view, you could get your TDI. TDI is common, it's not a new thing. Most of you already know about the TDI, and maybe you don't really know how to use it very well, maybe because you are using it at the wrong time. Okay, but what this video will be talking about is how I combine the TDI and my timing. Okay, my timing. Okay, because most of what you guys don't know is that this market, there are times when the market moves, and there are times you should trade, times you should not trade, sessions you should trade, and sessions you should not really trade. Okay, for we the btmm traders, we know that we don't trade the Asian zone, which is mainly for consolidation, accumulation. You understand? We don't trade that because we're not going to be having, most times we don't get good moves here. You understand? And this very zone, it's mainly just for accumulating contracts, gathering contracts, and most times you don't really know where the price is gonna go. Okay, because it's actually gonna calculate the amount of buyers and sellers. Whenever price is consolidating, they're actually kind of trying to take a decision, gathering contracts, and they will definitely go the opposite direction of where the bulk of contracts are. Actually, maybe you have so many buyers there are more of buyers during this Asian period, where do you think price will definitely go? Even if price was to buy, even if their intention is to take price high, but because there are a lot of buyers in this consolidation area, you will mainly see them coming down first, okay, making sure they actually take out the stop loss of those who use tight stop loss. Like me, I use a tight stop loss, and I don't trade this session. So you see them mostly they come down the opposite direction of where the bulk of contracts are actually, or where most people are actually predicting price to go. They go the opposite direction just to take them out, you understand, just to take them out. And when they go that's how they get their money. They hitting your stop loss. That's why we call it the stomp hunt move, okay? They hunt your stop losses and the rest, okay? So for this instance here, this is like GU on the 17th of November. You could see more of like a consolidation here. In this consolidation, we don't trade, okay? You could see this my color. This color just represents the Asian session. This other green color represents the London session. You could see this move here. You could see this move. This was the main move, and this was our New York session, where there's no much of a movement, okay? So you could see most times you get big moves in the London session. If it doesn't come in the London session, it will come in the Asian session. So how do we combine this with our TDI? Here you could see I just migrated to the trading view. In this my trading view, this you could get the TDI by just searching for TDI, okay? If I was to type TDI here, you could see different TDIs will come up, okay? Different TDIs would come up, and I think I actually use this. We're having one, let's say edited for MMM by Jacob something, okay? Or you could go with this one with the highest number of usage. TDI, that's 852. So you could pick any of them and edit it. Like this, I actually picked one and I actually kind of just customize it where we know our TDI. For me, my TDI levels are, I use the 22, which would show extremely oversold, and we'll be looking for buy opportunities. Okay, so you see this green line here, it's the level is that's 22, and I also have 32. Then on the upper levels we have the 68 and the 78. This dotted line is the 68, while this bold line is the 78, which shows extremely overbought. And at this area, when price comes around here, all you should be looking for it's sell opportunity. So you wait for your price. You can't have price around this area and you still be buying recklessly, you understand? Whether the direction of the market is up, you have to be careful. You can't be buying at the high. You understand? You wanna buy low and sell high. You understand? So when price comes here, as a good trader who knows how to trade the TDI, you want to stop. If you are in a buy position, you want to be careful. You understand? You want to be careful. And if you are not in a trade yet, you want to be careful buying at an area of overbought. You understand? That's how you trade the TDI. So the TDI, like I said earlier, we look out for divergence in the TDI. Here with no divergence here, okay, but here you could see so we look out for divergence. We also look at price coming out of the volatility band, because definitely price will definitely snap back into the volatility band. You can call it Bollinger Band, okay? Definitely price will snap back into it. So when price is outside the volatility band, definitely sooner or later price will snap back into it. So you want to wait. You want to combine it with your price action. Okay, let's say you come into the market like this instance here. We have a stomp hunt. We had a stomp hunt, and price was actually outside the band. All you're just to be looking out for was buy opportunities. You understand? And here you could see in this session, take note for my Nigeria guys and others, this is UTC +1. Take note, this video is all about TDI and the timing, so I'll be talking about both of them, because if you don't know how to, you can't just trade the TDI anyhow because price is here, you buy, because price is up, you sell, you understand? You have to combine it with other style or other method. I don't know how to put it, but here I'm combining it with my timing, my session. I don't trade the Asian session. And take note, for those who don't know the boxes, you could actually check my previous video, and from the video you could construct your own, or you join my Telegram group and get my direct contact where you can chat me up and work something out. Okay, so here we have for my Nigeria timing, we use the GMT +1, UTC +1. So by 8 a.m. the Asian session, the Asian box stops, and we'll get maybe our Euro open, you understand? Our Euro open, you understand? That's when most times those that trade news or whatever, that's the time you see Euro news and all those times. Okay, so we'll get, most times we expect a stomp punt move. By 8 you're expecting to get some sharp moves. Okay, price will definitely not really consolidate again, you understand, because it's like the market is just opening. Okay, so you get that, some sharp moves. Okay, so this will happen between 8 to 9. Take now, I'm using GMT +1, that's Nigeria time. Shout out to my Nigeria guys. What's up, guys? At the halo. Okay, so you get that move out, and this will happen between 8 to 9 a.m. That's GMT +1. So if you are not from Nigeria, or you don't stay in Nigeria, I think we have those in Canada, they -6, I don't know, UTC, GMT. So you just count some hours back, you just suit it to your own time zone, you understand? Shout out to my guys in other countries, okay, Canada, Singapore. I have so many friends even from India, you understand? So you guys just do it. But in Nigeria time, GMT +1, by 8 our Asian box stops, and you get price outside the box, you understand? So let me go to you could see this is something, you see what's happening here. This is not 17, this is like another time. This is on the 20th of November. Let's see if we could go to 17th of November. Okay, so you could see this 17th of November here. Okay, so this is where we are on our this trading view, and this is my MT4. Okay, you could see how my MT4 is kind of rough, but man, it's a lifesaver, you understand? So you could see the TDI here, right? You could see how a W was formed. A W was formed here. Okay, sometimes you get the pattern even on the indicator. Okay, so most times you could see this by 8. Let me check. Okay, this by 8, it's showing 9 here, but this the chart here is quite different. It's showing 9 here, but this my chart is 1 hour ahead of my own time zone, you understand? So it actually 8. So by 8 the Asian box it's completed. You could see this box here is the Asian box. Then we had this sharp move. Okay, we had this move outside the box, and mainly I believe I've talked about using the moving averages. Take note, as a btmm traders, we use several moving averages. We use the EMA 200, we use the EMA 50, we use the EMA 800, we use the EMA 5 and EMA 13. Okay, so one particular EMA that is very important, or two particular EMAs that you don't play with, is the EMA 200 and EMA 50. Okay, most times there's what we call pin to the mayor as a btmm trader. Okay, but I don't want to go into that. This video is mainly for the TDI and my timing. Okay, these boxes. Okay, this first box represents the Asian box, we have the London box, and we have the New York box. That's how it is for all my charts, you understand? You could see these are the boxes. So this is actually one of the secrets how I trade the market. I don't trade outside this box. Okay, most of my trade are in either London box or the New York box. I don't trade the Asian box. Okay, so what we do as btmm traders, we wait for stomp punt move, and we'll look for the pattern. Okay, we look for the pattern. Here there was more of like a I think this is, we'll call it the railroad track. You could see more of like an engulfing candle here at this major at this 200 EMA here, which is very important. And on our TDI, you could see we had a W here. You understand? After price went outside here, okay, maybe, yeah, it went outside the volatility band. Okay, it went outside the volatility band out at this very zone here. Then you could see more of like this, more of like a divergence, because price actually moved down, but on the TDI you could see they were still on the same level. So it's divergence. Divergence is when price is kind of doing one thing and your indicator is actually doing the others. It's more of like a stomp. It shows stomp hunt, how they've grabbed liquidity. You understand? They've grabbed contracts, because these guys, they always look out for where the contract is. So most times where you get your price action going down while your indicator will actually not really move or will go the opposite direction, it just shows there is some form of discrepancy, which is the divergence. Okay, so it's actually no move on it's your lower time frame that will show that move, but on your higher time frame it doesn't really show those moves. So that move there is more of like telling you they've actually grabbed some liquidity, and whenever they grab liquidity, that's when they normally kind of reverse. Okay, you look for reverse signal. They don't just reverse like that. So that's why most times it's good you always go along with the trend, because reversing actually takes more effort. It's easier to just flow with the trend, but that's by the way. You could see here, you could see the W here on the TDI, and you could see price here. So what I'm trying to say is that, yeah, we look for the patterns at the TDI. Okay, we look for divergence. Okay, this was not a clear picture, but before this video ends, I'll show some trades I took, and maybe we'll see how price, I will see the relationship between price and the TDI. But what I want you guys to know is that I don't trade in the Asian box, and by 8 this box closes 8 o'clock GMT plus 1 Nigeria time. If you are not in Nigeria, like I've said, go back and readjust it. Or if you are in Canada, I think you guys are 6 hours behind or 5 hours behind. USA too, 6 hours behind. I don't know, you understand? But this GMT plus 1, UTC plus 1, and it's 8. By 8 this box end. So for the next 1 hour, most times we don't trade, but you can discipline yourself not to trade, which is by 9. Okay, so by 9, that's when you want to start looking for opportunity. Okay, so at this 8 here, you may get your first leg here, and another leg may be formed, which will now be inside this box. Sometimes you will get a very good W here. Let me go to the, okay, so this is this guy here. Let's see if we could draw something here. Okay, so you could get a W here, like more something like this here, and we could get another. So you could also get something like this here, but in this case we are just having an engulfing. Okay, so you could so you could get a W, but in this case we are just, by here you could see our TDI was showing a W, you understand, but here it wasn't showing. Maybe if we were to check your M5, you'd see a W, because sometimes your M15 will not really give the W, but when you go to your M5 you'll be seeing a W here. And this was our Asian session where we normally trade. Okay, this was a trade you could have taken. Okay, let me go to this chart back. This was a trade you could have taken. An aggressive trader will just, since it's pinned to this major here, this EMA 200, and we have the TDI. Take note, this was London session. Once you get a stomp point to the low of the TDI at an early hour, where you know the time before the market to close is still very far, definitely there will be a buy. Definitely there will be buy opportunities. It's as simple as that. You understand? So when earlier you wake up and you get a stomp point to the low of the TDI, definitely you get buy opportunities. So especially for us that sometimes we take whatever the market gives us. Some days I trade like a scalper, you understand? Because not every time you get long move in the market. You understand? So sometimes I go 10 pips, 15 pips, 20 pips, 30 pips. Most times, let me not lie, most of the times actually 30 pips is actually my target, you understand? So if you were to take an entry here and you get this right up, or you could have also waited for a close, take note, but here it's more of like outside this box. I don't trade until the London box starts. So if I was to take a position, I would have taken a position here, which is the beginning of this London session, and this would be a ride. When you take a position here, your stop loss would be here. Okay, let's go to our let's say I take a position here. I want to delete this. Trying to delete it, but I can't. Okay, so I want to delete it. That's funny, man. So you get what I'm trying to say. So in this case here, I would have taken a position here, which is more of like we had a pin to the 200 EMA, we had our TDI showing signals, you understand, and we had a close. Some of you are asking of my entry. I've always shown my entry. Okay, most times when I get a pin to the 200, if I want to be very conservative, I always want to wait for a close above the 50 exponential moving averages, which is the 50 EMA. You understand why? Because most times the 50 EMA is very stubborn. Yeah, it's very stubborn. It's very, very important. The 200 EMA and the MR50, I don't really play with them. Okay, so most times my entry is a close above the MR50. If price was to, even if I was to get a pattern, let's say I got here, we didn't get a W, but let's say I was to get a W, I may have entered. Okay, this would have been an entry. Let's say price close here. Okay, this would be my entry, a close above the MR50. Okay, because most times the MR50 always rejects price. Price sometimes would come here and bounce back. There are luck here that we also have the 200 EMA here, which is also very strong. Okay, but take note, what I'm trying to say here is about the TDI and the timing. Okay, let me go back to the MT4 chart. So you want to trade inside this box. This is the London box. Okay, you take a trade here, and take note, for those of you who normally use big lot, big stop loss, if you are wrong here, take note, price is definitely, no matter how your stop loss, sometimes you guys would put a stop loss of 20 30 pips, 50 pips. Man, most times they'll go for it, especially for pound spare, where these guys, they move a lot. Okay, these guys, they move a lot. And take note, each session, most times once they choose their direction, they will only take one direction till the end of that session. That's why most times you would see London session, we have the breakout in the London session, then before there will be any form of reversal, it will be in the New York session. So please, me for some time now, I use 7 pips stop loss. Highest I will use is a 15 pip stop loss. You understand? Okay, so if I was to take an entry here, my stop loss would have been here. Maybe I think this would have been more of like 20 pips or 30 pips. You understand? So my stop loss will be below this green line here. But here I could have just gone for this bearish candle that I rejected. I'll put my stop loss here, take my entry here, then we ride it for the rest of the London session. You could see. Okay, so this was an entry, and I would actually talk. Okay, this was an entry, so we'll quickly look at let's look at some trades I took. Let's look at some trades I took. I don't know why it's hanging. I don't know why it's hanging, you understand? Okay, let me go to this. So we'll look at some trades I took. Okay. Oh, funny. Okay, so let's quickly look at some trades I took. Let's see how let's see if we learn one or two there. Okay, so I'll look at October. Let's look at October 23rd. Let me look at October 23rd on GU. Sorry if I may be taking so much time here. I don't really know how to use this tool very well. trying to go to October 23rd. Okay. This is November. I don't really know how to shift back. I'm really sorry about that. Okay, it's taking too much time. So do we have anything on November? Okay, so let's say November GJ. Let me look at GJ. GJ November 13th. Let's look at GJ November 13th. I took a trade GJ November 13th. Sorry, I couldn't go back. Let me see. I took a trade GJ November 13th. Okay, GJ, yeah. So GJ, I actually took a trade here. You could see this was the Asian session here, and what do you see? You could see how price actually moved outside the TDI, the volatility band of the TDI, and we actually had you could see here, price was pinned to the 200 EMA here. Okay, price was pinned to the 200 EMA here, because most times you want to wait for an M. Okay, you want to wait for an M. Okay, so this was a trade I actually took because of what happened in the TDI. Okay, we are at extremely overbought area. Okay, and we got price pinned to the 200 EMA here. Okay, it's not bad if you actually take a trade on a close back into this you could see this very shift candle here. After this the second bearish candle, it would have been bad if you took a trade there. You understand? Okay, because this is more of like an M. Okay, this is more of like an M. Let's say this is more of like, you add an M here. Okay, so this was more of like an M. So you would have taken a trade here. Wasn't really bad. Taking an entry at the close. You have to always wait for a close of the candle. Okay, so this was a trade I actually took. Okay, so let's look at what could have been the risk to reward here. Let's say a short position. Okay, so this was more of like, so when you take this trade here, sometimes you can target the low here. Our target would be the 800 EMA, because this is also a support. You understand? This would act as a support. Okay, so let's say you put your stop loss above this the high. Okay, above the high. So this was more of like close to a about above 1:3, up to 3. You understand? Up to 1:3 RR. You understand? So this wasn't really a bad trade. You understand? This wasn't really a bad trade. You could see the TDI here. Okay, we had a shark fin, more of like a shark fin, and we had price coming down. So this wasn't really bad. We had price pinned to the major, and this would have been my entry. Okay, this would have been my entry, or you wait for a close. This was a close, and below the EMA 13. Okay, the EMA 13. You know, most times our entry sometimes should be the 5 and 13 cross. Here we had pinned to the EMA, pinned to the 200 EMA. We had price a shark fin in the TDI. These were confirmations. You understand? These were confirmations for sale. These were confirmations for sale. Okay, because here we are already at overbought area. We are already at overbought area. So for those who want to know the settings for TDI, the one I use, you could check the Telegram description, get my link, and contact me. I really wish I could see more. There are some, okay, let's see, let's go to GU November 18th. Let's look at GU November 18th. Let me see if I can see any other trade I took. GU November 18th. This is November 17th. Okay, let's see November 18th. And this was 18th, right? This was 18th. Let me go to okay, let's go to November 18th. I think this was 18th. Okay, this was 18th. Yeah, and here you could see this actually took a trade here also. Okay, I didn't trade this Asian session. I actually did not trade it. I didn't take this trade here, but this was a trade I took. Okay, you could see here, what did you have here? You could see this was a TDI. Okay, we had more of like a W here. Okay, we had a W here, we had a W here. Okay, I actually took a trade at this close of the MA50 here. Okay, it was more of like a trade continuation, which we call the ID50, btmm, the ID50, where we call it a bounce of the MA50. Okay, and you could see your TDI here. What is your TDI? You could see the W, nice W on your TDI. So this was a trade that I took on the 18th of November. This was a nice trade, you understand? This was a nice trade. I didn't really get a good trade here, and this was a nice trade. Take note, if price is above these MRs, okay, you have to try to always go in line with the trend. You could see price was above this MR, so your buyers should be looking for buy opportunities. It will not be bad even if you are wrong. Just try and follow the trend almost all the time. Okay, so you could see here we're looking for buy opportunities because price was above these MRs. You know, these MRs, they act as support, and they act as more of like dynamic support and resistance. You understand? And in this case, price is above, so it's giving the overall trend. Okay, it's giving the overall trend. Okay, take note, the MRs, they also show the trend. Okay, here it's showing that this is an uptrend, so you want to look for buy opportunity. Okay, so that was 18th of November. 18th of November. Let's see USD CHF. USD CHF 17th of November. USD CHF. Where's USD CHF? Okay, USD CHF. Let me see. USD CHF 17th of November. I had was it a sell? I had a sell. 17th of November. 17th of November. Okay, so this was USD CHF 17th of November. Oh, sorry, let me show you my position here. Okay, here you could see this was USD CHF 17th of November. This was the Asian box. Okay, and here I actually took a sell at this very place here. Okay, I took a sell at this very place here. I took a sell at this very place here. Okay, where we had this move. Take note, my bias was sell, looking at the higher time frame, and here look at, we had more of like, you could see we have this 200 EMA here. We call this the pin to the major. Okay, so this shift candle, you taking a trade at this one, at this shift candle wasn't really bad. You could stay as well. Wait, take note, we had the pin to the major and we had a close. You could see the MA50 here, this blue line. This shift candle here, close at this shift candle here was actually my trigger. And if you could see, take note, in this Asian box we also have the high of the Asian session. the middle of the Asian session and the low of the Asian session. This very shift candle closed below the middle of the middle of the Asian session. So the next place, once you get this, definitely price is definitely gonna come down to this to the low of this Asian session and probably even break it. You understand? So I actually took this trade on this shift candle here, and price actually came down. This very first move, I closed my position. It was sharp, and price pullback. I think I entered again using M5 to join this down move again. You understand? So that will be all for today. Okay, so what I'm trying to say is that most times the TDI, yeah, it gives signals. Whenever you have after the Asian session at the early hours of your trading day, let's say you are from London or Euro. Okay, take note, trading session. I'm not talking about where you stay or whatever. You understand? At the early hours where we still have the London session, we still have the New York session, and you come to the market after the Asian session, you see the TDI already blown out. Definitely there will be reversal trade. You understand? So let's say you come to the market and the market is still early, still young, and you get the TDI already at this level. All you should be doing, you should know that the market will not keep on going. The TDI will not let him. The market cannot just keep rising. Have you ever seen that? You can backtest. You hardly see market coming up here at an early hour of a trading day, and there will be no sum of pullback or markets coming reversing. So why, if you know this, why won't you just look for the opposite signal direction when after the Asian session you get your market, you get a shark fin, you get your volatility band blown out, you understand, or you get divergence? So what you just do is to wait for the reversal. You understand? Here it was a very good signal. USDCHF, we had pinned to this the 200 EMA, and we had this shift candle here, this candle that closed below the EMA 50, and on the TDI you could see where it was. So there was every tendency there would be sell. So what I'm trying to say is that like I've just repeatedly said, when you come to the Asian session, after the Asian, you should wait after the Asian session, then you start looking for the pattern in line with your TDI. Your TDI is your confirmation, and the timing too. Always try to trade inside this box. Okay, so here this London box starts 9. Okay, this very candle here was 9 a.m. Nigeria time. Okay, it was 9 a.m. Nigeria time, you understand? It was 9 a.m. Nigeria time, and let's say if this was 9 a.m., you could do the calculation. I think 9 a.m. when will it end? If this is 9, we have 10, 11, I think it will end like around 12 or so. It would end 12. Okay, it would end 12. So this is the box. If you are interested in getting it, you could get in touch with me, then we'll talk how I would give it to you. But I don't know, I'm not really promising anything. But for the FXN, these are how this, you could still just get it from here by you typing, you could type FXN, look at all this. Once you type it, you'll definitely see all the session. This is from my mentor. Okay, this is from my mentor. You could check them out. They also have a Telegram group. So all this indicator will help you demarcate your chart also. But the indicators for this MT4, I don't really know if I can actually give it to you. I don't really know the settings. It's kind of hectic, you understand? But it's kind of hectic. So please, that will be all for now. I believe you learned one or two from this. This is actually how I trade. But this particular video is mainly for the TDI and these boxes, these timings, our timing. You understand? There are great opportunities here. So I advise, after watching this video, you go do your back testing. You understand? Do your back testing, and you will be surprised how these things, they come in all the time. You understand? But please, you have to always focus on risk management. You understand? Focus on risk management. There's no holy grail. Even if there was holy grail, the only thing that can keep you long in this game is you sticking to proper risk management. I hope this video is helpful. Please, if it's helpful, give me a thumbs up, and also leave a comment below. And if you are new, if you haven't subscribed, please subscribe. And I also like you guys to share my share the link to my channel. I need more subscribers to encourage me make more videos.
Bye, bye.